Sanjeev Sharma, Managing Director and Country Head, along with Mr. TK Sridhar, ABB CFO of ABB India. They both join us now. Good morning to both of you. Thank you for joining us. Sanjeev, the big surprise this quarter was the order inflow spike of 36%. Was there any bunching up which happened? Were there any segmental factors, seasonality factors which were at play?
In our experience and view, the demand on the ground is pretty strong. And as you know, ABB, we have 18 businesses, and all these 18 businesses are exposed to about 22 market segments. And many of the market segments we are exposed to, they are cycling up, namely paints, locos and metros, metals and cement, energy companies, gas and oil, and data center type of projects. So these are the projects which were prominent in the Q1 results.
Right, Sanjeev, morning. Now, when we look at the quarterly run rate of over 3,000 crores, does that look sustainable when it comes to order inflows?
In terms of the market formation, we still see the same robustness as we have been experiencing in last few quarters. And we have no reason to believe that this kind of momentum in the market continues. I think as far as the quarter-to-quarter concern, the order strength, I think that keeps varying because the different customers have a different cycle of placing those orders. So we will see how Q2 plays out. As far as Q1 was concerned, I think we are quite pleased with it.
Sanjeev, you also stood out in the fourth quarter performance and that double-digit margin across segments that you clocked. What's been aiding the expansion, and are there further levers for margins?
We have a very strong order backlog, and we are able to execute quite smoothly because we have scaled up our inventories a bit so that we are able to kind of carry out all the obligations that we have taken from the market. So that consistency of revenue delivery, I think that has been showing up in our profitability as well. And generally, overall value chain tightening that we have done over a period of time, all the efficiencies we have got, that's showing up in our margins.
So Sridhar, the double-digit margins, are they sustainable across all segments?
Yeah, I think the order backlogs have a strong margins as what we see at this point of time. And we, as I said earlier, our target is to keep consistent delivery of 10% at the bottom line quarter on quarter. And I think as a first step in this year, would like to look at credibility every quarterly delivery. So I think the order backlog support that particular view.
Right, and Sridhar, specifically on process automation, sequentially that's been a little bit lower. Is there any structural slowdown or any cautiousness when it comes to discretionary spend? Because automation as well is likely to be muted.
So in the last quarter, if you look at from the order inflows for the process automation, there were definitely certain large contracts which were decided. So and that actually gave a blip to the process automation orders. But when you look at the pipelines, they are pretty much consistent, and we see a robust order backlog, order booking, which could be developed in the coming quarters. So when we talk of margins, I think it's more to see sequentially. I think process automation did deliver a stronger margin in Q4 2022, and that's probably driven by volumes and also a favorable mix of exports and services which they had to a greater extent in Q4. But I think in the quarter, they had more of system revenues which came up as per the execution pattern, what happens on projects. So, but otherwise, we don't find anything which is quite abnormal there.
If you could give us a bit of more insight on the order inflow trend. Are there more short cycle orders versus long cycle? And also, are the orders now stemming more from new age industries as opposed to traditional?
I think the rate of growth is in the new age verticals, and also the traditional verticals are holding up, and there's quite a bit of OPEX as well as CAPEX spend there. And also large traditional players have acquired a lot of assets in the market, especially when there were stressed assets available to them, and they are upgrading those assets. So that's where we also see a lot of traction for us.
Give us a bird's eye view on how the slowdown has impacted ABB in the industry, if at all there is any slowdown.
We are seeing there's a good traction in the domestic market. And I think we are often asked about this question, whether there's a slowdown. I think our kind of business is something which is not so sensitive to immediate change in the consumption patterns. It could be more true for FMCGs. We are more like, say, fast-moving industrial goods, which takes quite a bit of time for formation of capital, and then you see those cycles through. So we are still seeing a good cycle ahead, and yeah, hope to see you at next opportunity.
Yes, we certainly hope for that. Appreciate your time, Sanjeev, as well as Sridhar. Thank you so much for joining in.